This video is going to be the first in the trading industry going over real time and price theory. Every single time I scroll on social media, all I see is fake trading educators. They're talking about random candlesticks within the market. They're talking about patterns, and none of this repeats within the market. And most importantly, they haven't made any single money from the market. So how can you learn from someone who hasn't made any money from the market, can't show they can call price live, and hasn't shown any results of others being profitable with the strategy? And that's exactly where I come in and flip the script. I've made multiple 5 and 6 figures from these markets with verified payouts, and I'm going to show my recent 2-month stats on the screen right now, where I've accumulated over $40,000. So with that being said, you know now to listen up and bring your notepad out, because what I'm about to teach you is going to be the first in the industry, because I've actually made real money trading this within the markets. So let's dive deeper into time and price theory. I need you to watch this whole video. If you can't sit through a 10 to 20 minute long video breaking down exactly what you need to succeed within these markets, it's going to be very difficult for you to try and learn anything from these markets and even succeed at all in life or trading. So why does time matter within the market? Why is trading so important? Why is trading with time so important? And how does the market work within time? So the concept of accumulation, manipulation, and distribution, and the power of 3. So these two obviously work hand in hand. Every single day and every single week, you're guaranteed 1 weekly candle. That's what you're guaranteed. And you're guaranteed 5 daily candles that are going to go into this 1 weekly candle. And this 1 weekly candle is going to make up a accumulation within the market. So this is going to be an A part of this candle, a manipulation, and a distribution. So to make money consistently from the market, you are going to be trading the distribution. So that's going to be when the market's trading higher or lower, so trending. The accumulation is going to be where orders are going to be built up within the market, above and below. And the manipulation obviously is going to be the false move. This is going to trip traders into taking a trade to the downside or the upside, so in the false direction. So this is exactly how the power of 3 is working every single day with accumulation, manipulation, and distribution. There's 3 phases the market's always within, and you want to trade the distribution, and this is exactly why time comes in. The market pretty much runs on a clock, so I need you to take a step back and think about the markets very logically right now. So trillions of dollars go into these markets every single day. People like Jamie Dimon, they are putting trillions of dollars into the markets every single day. Do you really think anyone that has $1 trillion is participating in a market with risk? Obviously, they know that the market does have some elements to risk, but they want the probabilities in their favor. They want to know exactly what the reward is going to be every time they enter a position or whatever they have running in the background. And that's exactly how you need to be thinking about these markets. Everything works within a cycle. The markets are already programmed to make the high and low months in advance. That's why you trade the futures contracts. That's another thing that most of these educators haven't taught anyone in the industry. They don't even understand what a futures contract is or what it means. So the pricing of these markets is already predetermined, like where the daily candle is going to close, where the daily candle is going to be. It's already predetermined. So if that's already predetermined, that makes you think the market isn't random at all. Like, we don't just randomly wake up and the market is like, today I feel like making the lower day right now at 3 p.m. because I'm bored. The market or anyone trading these markets at a higher level, that doesn't happen. So everything works within a cycle. Nothing is random within these markets. That's one thing you need to understand. Nothing at all is random. Every single time price consolidates, manipulates, distributes, none of that is random. It's actually right on time, which is the most important thing, is scheduled to do that. So large participants within the market, they all operate on a schedule. So high probability setups are always going to form at a very specific part of the day. So trading becomes a lot easier when you stop fighting time and you actually take a step back and be like, okay, so this is where a high probability stop run is going to take place at this certain time of day. Okay, so now you've understood the stop hunt's going to take part at a certain time of day. You can eliminate the random times you just sat within the market waiting for a setup and getting chopped up because you're basically trading within the accumulation. And one thing for sure, you're not trading an accumulation. You want to trade the distribution. So you want to trade this move, you know, the move that everyone is like, oh, I wish I caught that. I wish I was able to participate on that. Well, listen up, because you're going to be able to do that. So you can see this is where the market accumulates, manipulates, distributes. This all happens at very specific parts of the day. So if we look right here, this is a very good picture of the idea of accumulation, manipulation, and distribution. So I haven't shown the time elements to this. I've just shown it on a candlestick pattern. So you can just see this is what's going on. The market's accumulating right now. This is where we take out the low. So this is the manipulation to the low. This trips traders into thinking, okay, we're breaking out now. We should start trading to the downside because this is a breakout. Fails, delivery shifts. So we're going to get into the real delivery shifts within the market. And then we have the expansion. So the distribution, this is what you want to trade. This is what you want to be a part of. And that's exactly what we are going to get into with the importance of time. So the generic way everyone is taught about liquidity is the Asia session is an accumulation, London is an expansion, New York reversal, or a continuation. Well, I want you to only focus on this. Forget all of this stuff, because I don't want you thinking like the rest of the people, you know, like the rest of the people that trade these markets. I don't want you to think about like them. So the first thing you need to understand is the liquidity that forms is predictable. So you know exactly where the timings of the liquidity pools are going to happen. You just don't need to care about the normal accumulation expansion stuff. All you need to know if you're trading the New York session is it going to be a reversal of London or a continuation? That's it. If you're trading Asia or London session, you don't even need a daily bias, because what I'm about to teach you, that's very mechanical. So you don't even need to look through what is the daily chart telling me? What is the hourly chart telling me? What is the 1 minute telling me? What is the 5 minute? Because if you break down the markets like this, you're going to be so confused that you're not even going to be able to trade, because you could be like, the daily's telling me to buy, the 1 hour is telling me to sell, the 15's telling me to buy right now, the 1 minute's telling me to short right now. So this is why we're eliminating all of that. All the confusion is going to be eliminated from your trading. So that's all you need to care about. If you're trading the New York session, these two things are very important. These two, you don't even need to care about. Asia and London, you can trade them very mechanically with the way I'm about to teach you. So understanding the flow and how it changes and how to enter trades. So again, the fractal can be viewed as like this. Asia as the accumulation, London as the manipulation, and then New York distribution. So New York is what? This is a reversal of London. So that's all you need. It's only going to be two things. So if you're trading the New York session, why is it going to be important? The New York session is going to be important because it holds the highest volume. But as it holds the highest volume, it's going to be the most volatile period within the market. So I want you to listen up, because you're trading against some of the smartest, brightest minds in the whole world. Full stop. The people that trade the New York session, they are the brightest, smartest people in the world at the institutional level. These guys are being headhunted to trade the markets at that time. So if you're not switched on, you have really no margin to be wrong. You need to be able to sit in front of the markets, know exactly what you're looking for, the exact times this should happen, and then you are going to be looking to enter a trade. So New York session holds the most volatility. It's the highest volume, but it's also the only session within the market that you have no margin for error. So if you're wrong, you're going to be wrong, and the market's going to expose that. So you need to be on your feet and be able to identify exactly what's going on. So the economic calendar releases around 8:30 a.m. So that's usually the time the liquidity is also being hunted. So that's the importance of a economic calendar news event. It's only hunting for liquidity. That's it. So that's all you need to look at. Then you don't need to be in front of the markets at 8:30. Regardless if there's news at 8:30, regardless if there's news at 10 a.m., 9:30, the opening bell is the most important, because you want to be aligned with the bond market. So reversals are often going to occur from 9:30 to 10 a.m. and 10 a.m. to 11. This is where the optimal period of the market is going to happen. So I call it the optimal period because a new 4-hour candle opens. So as a new candle opens, we're looking for it to run in one direction, either take out the liquidity to continue a move to the upside if we already got it. So for example, right here, we have the accumulation and then we had the manipulation. So you see the market shifting delivery, closing above this, 10 a.m. comes in. I want to see 10 a.m. just expand. So 9:30 to 10 shows as the reversal. I want to see 10 as the continuation for that reversal to trade higher. So we're breaking down slowly the generic New York AM sessions into real-time based ranges. And in 2026, we are going to get into a lot more of that. So most of the 40,000 I made is in New York session, but also a lot in London session as well, trading my time-based ranges. So this is what I want you to know. 9:30 is only a manipulation. Forget what everyone tells you. Forget what you've learned, okay? I want you to only just know about this. 9:30 is only a manipulation. Don't view it as anything else, okay? So now you understand 9:30 is a manipulation. You know that orders are going to rest within the market. If 9:30 hunts one side of a range, which is going to be my time-based range that we're going to get into, that's where we're looking for a delivery to shift for a retracement or a reversal. You only need a retracement or a reversal. That's it. You only need 50 points. I'm telling you, with 50 points, you can make a lot of money. And you don't even need to look for that every single day. You just need to be switched on, know what you're looking for. 3 days out of the week, bang, you're done. Stop looking for more. Your brain is programmed to look for so much from these markets because you've never been exposed to the markets from this lens. This is a lens flipping everything you know about the market. So stop trying to blend this with other random teachings from other people, okay? I'm teaching you how to make money. They're teaching you how to stay within the market, okay? I'm teaching you how to get to a point of becoming independent. Okay, now we've gone over that. We're going to speak about the most important thing. It's opening prices. So opening prices for the week and the day basically tell you whether the market's overbought or oversold. So the opening price for the week is 6 p.m. on Sunday, Eastern Standard Time. So I don't know why you guys keep asking what time are we trading. It's only New York time, so UTC -5. Just keep your trading view at New York time and you'll be fine. So 6 p.m.'s opening price, you have this open the entire week. So when we open on Sunday, that's the opening price for the week. So that's where a fair value is found in the week. And daily, every time the market opens, obviously you're looking at 6 p.m. 6 p.m. is the opening price. That's what you need. Every single day, that's going to show you intraday where the market's overbought or oversold. So this is usually for the Asia session and the London session as well. And this is the power of 3 fractal. You know, this is where the market's going to open up. Once we open, you're looking for it to trade to the downside. So you see, this is where 6 p.m.'s opening price is as well. We dip below it. As we dip below it, this is a market within a discount. So we are oversold. We're looking for the market to trade higher. Accumulation, manipulation, and then distribution. So you obviously want to trade in the direction to the upside. So you can see right here, this is where I have the weekly open. Price pushes lower. So you can see we haven't had any trading above this. So if you see this within the market, Monday, we just trade to one side and Tuesday we do the same, then you know, okay, so as we only opened up and traded lower, we should trade above the weekly open because the market is oversold. So OS stands for oversold. And now we have the daily open. So we have the daily open, price opens up. What does it do? No trading takes place below these lows. These lows hold liquidity. We push higher, accumulation, manipulation, distribution fractal. You see here, accumulation, manipulation, distribution fractal. It's all right in front of you guys. Okay, now the most important part of this video. It's my time-based ranges. So these ranges follow a very strict cycle within the market. That's why you oftentimes see market takes out both sides of the range, bang, we're done. And you're like, where is my entry? The market's not waiting for you to get into a position. The market couldn't care less if you were in a position. So you need to be able to have a bias built. You need to be able to make decisions in your head before they even form. So that's one thing you need to understand, okay? So it's basically working with this fractal. AMD, the market cycles that repeat. So once you recognize the timings of this phenomenon that's happening within the market, you know that you don't need to spend hours and hours within the markets trying to figure out what's going on. Your win rate will increase with this, but that's if you follow everything that I'm teaching you. So 112 to 212, first range. This range is very important for the London session. You're looking for the low to get taken, target the high, okay? Very simple. Same thing right here. You're looking for the low to get taken, target the high. Same thing for the New York session. This is from 812 to 912. And you're only looking to trade the expansion. You can see the expansion. You don't care about the manipulation. You don't care about the accumulation either. You want to trade the distribution and be in and out of your trades. So if you look at this example right here, we have 112 to 212. Price pushes higher. This is actually a trade I've taken. You can see we trade above the high. Once we trade above the high, we have my 3 candle change delivery. We push lower, close below this. This is a short for me, targeting the low of the range. And this is where I'm getting out of the market. Even though the market pushes even lower, this is where I can get out, or I can just target the full low of the range. So this is the range low. This is the range high. You can see we fully take this out, but this whole fractal is going to give me 50 points. If it gives me 50 points, I'm happy to take that. You can see it gives you a bonus. So if you wanted to hold for that, then you have more that is being given to you from the market. So most important thing is taking profits as well from the market. But you can see the AMD fractal is right there. That's exactly how the market moves. Same process right here. You can see we have the accumulation, price trades below it. We have the manipulation, full candle change and delivery. You see, we trade above it, close above. This is a long. We're looking for the upside. So we want to trade the distribution. We don't want to trade within the time-based ranges. We don't want to trade the manipulation. All we care about is the move to the upside. So I hope you did gain something from this video, understanding how the power of 3 is working within every single intraday movement within the market, why it's important to focus on time within the market, and why you need to be able to identify exactly what's going on within the market. If you can't do that when you're day trading, you have no margin for error. You are going to be caught out and you are going to lose money. This is why I put an emphasis on learning trading the right way. So we're fastly approaching the new year. I am going to be going into more of new teachings in regarding to the market cycles and new time-based stuff, but I'm introducing you to the understandings of why time is so important, because nothing on YouTube is breaking down exactly how to focus on time. And most importantly, no one that's even teaching about anything is making money from these markets as well. So I hope you did find this video insightful. I will be shutting down my one-on-one mentorship, unfortunately, but we will be opening back up in February. Right now, I'm focusing on the people that are already inside. However, I do have exciting stuff coming for 2026, and I'm more than certain this is going to help take all of your trading to a next level as well. So with all that being said, remember, I'm rooting for you, and I hope you do find success in this business. As always, enjoy the rest of your day.